Just like you had seen the thread burn in the intro, the brokers of MCX in India had lost 400 crores because of delayed settlement. To know how it happened, stay tuned till the end of the video. So this video is all about the oil crisis which is currently going on in the world and how did all this happen and why it is happening. To understand all this, first thing which we need to understand is options. To understand all this, you don't have an option but to understand how the options work and the option trading for the crude. So yeah, let's see how the option trading works. And the basic definition of option is an option is a derivative. Now you might want to ask, what is a derivative? So the dictionary definition of derivative is it is a financial instrument which is derived from the value of an underlying asset. Like for example, Nifty futures are the derivatives of Nifty. In options, you have two things. You can either call or you can put. So if you are calling, what happens is you are expecting the market to go up. If you are putting, you are expecting the market to go down. So that is the most important thing. If you call and the market goes up, you earn money. If you put and the market goes down, you earn money. Vice versa will make you lose some money. So to make you understand how the option chain works and how the option actually works, the calculation part of it, look at this.
As you know the meaning of the options, let us see what the option chain is. Okay, so there are a total of 22 columns in option chain. Here we just have 5. So I'm going to explain you what the option chain is in just 5 columns. So for that you have to understand the meaning of an underlying index. So here we are just assuming that SHYS is an example of some underlying index. The underlying index is currently running at 75 rupees. So the strike prices are like this. So this is where the current underlying index is at around 70 to 80 rupees. So this is the call area and this is the put area. The whole option chain is divided into 4 parts. This is the first part, this is the second part, this is the third part, this is the fourth part. See, if you are in this part or if you are in this part, you are in profits. If you are in this part or if you are in this part, you are in losses. So let us try to understand the meaning of that. Let us understand the calls first. So for every option, there is a lot size or the quantity. So let us assume that the lot size of SHYS is 30. And the call price which is currently going on is, let us say maybe at 5 rupees. So in this calculation, you will be buying the option of SHYS at 150 rupees at a strike price of 70. So now the magic happens. Now, for example, the stock goes to 85 rupees. So what happens is there is a difference of 10 rupees in the underlying asset. If you multiply the difference of that 10 rupees with the quantity, it turns out to be 300. So there is a difference of 150. So you have made 150 rupees on this trade, considering that it has grown from 75 to 85 rupees. So now let us see how the put works. So considering the lot size is always same and considering the put price is also 5 rupees at a cost of 80, you have bought it at 150 rupees and assuming the market has gone up to a level of 65, then it is somewhere here. So you have again made 300 and you earn a profit of 150 rupees. If you are in this territory, you are in losses. If you are in this territory, you are in profits. So I think you have understood the option chain very clearly.
So I think you have understood how the option chain works and how the people buy and sell options. So in crude oil, basically there are 2 kinds of people. One who wants delivery and one who wants to earn money through speculation. So there are traders and speculators. If you want to know who traders are people who are from oil companies whose raw material is petroleum and countries which want to fill their crude reservoirs, and all these people who need crude as a raw material, who are expected to take the delivery of that crude. On the other hand, the speculators are those people who just care about the price difference. If there is a change in price, they will buy or sell and they'll earn money from it. So that is the difference between a trader and a speculator. See, there are majorly two crudes which are seen worldwide. One is the Brent crude and one is the NYMEX crude. The Brent crude is considered the benchmark all over the world because it is considered as one of the finest quality of crude in the world. On the other hand, NYMEX crude is considered the second quality of crude, and to give a small comparison, NYMEX crude is for petrol and Brent crude is for diesel. And Brent crude is traded in Britain and NYMEX crude is traded on the CME. And why it is called NYMEX crude? That is a very good question. In 2009, New York Mercantile Exchange was bought by Chicago Mercantile Exchange due to various reasons of the 2008 recession and a lot of things with that. So now the question comes why the crude prices fell. So there are a lot of reasons for that. See, in the next scene, we'll be seeing a small clipping in which you will understand basically why the crude oil prices fell. So here you see it.
So now let us see how the dynamics of the crude market was during the recession. So let us consider that this is the start of recession. So if this is the first month, so let us consider that this is Jan and this may be April. So considering this, let us assume that when recession started, it was here, the supply was here. So as the recession progressed, there was a gradual loss in supply and it turned out and it saturated somewhere here. I'm sorry, the demand had subsided at that place because there was very less utilization and as everyone was locked down in the world, so there were very few people who are using automobiles and all industries were closed, so utilization of petroleum products were also very less. So now let us see how the supply had a problem. So one thing which you have to remember is in crude, decreasing supply to an extent is easy, but cutting down the supply completely is very difficult because to restart the supply from an oil mill, it takes more amount of money than letting it continue at that pace. So that is the reason the supply had reduced very little bit. Now if we take the oil reserves, so generally the oil reserves are at 75%. So considering everywhere in the world, so right now India has 100% of oil reserves. That is the reason we are not buying oil at that rate. So generally in most of the countries, the oil reserves are at 75%. So what happened now is as the supply came in and the utilization was low, the oil reserves started filling up. So this is when the oil price started to drop. So at this point of time, the supply was coming in and reservoirs were almost full.
See, okay. So now as you have seen, why did all this happen and why it may happen again, because if you want me to predict future, what I can tell you is the recession is not going away in one more month and the next contract expires in another 30 days. So how do you expect the contract to stay stable at $10? Right now it is trading around $10 to $15. So if you're expecting it to go up, then you may be a fool. So I think it is a good time, if you have enough guts, it is a good time to short the NYMEX crude for the next month's options. Okay, so initially I'd said that Indian brokers have lost more than 400 crores in a span of 5 hours. How did that happen is a very good question. See, Mcx Crude is a cash settled option. It is queued from the NYMEX Crude. So I think all this needs a completely different video. So what you need to know is Mcx Crude uses NYMEX Crude as a product, which is as a derivative for trading. So what happened is Indian markets had ended at 5:30 p.m. because of the reduced trading hours. And late at night, when the NYMEX crude fell, and one more thing which I want to tell you is NYMEX crude is traded 23 hours a day. There is only 1 hour of settlement and 23 hours of trading. So that causes big troubles for exchanges which trade NYMEX crude as a derivative. So what happened was at 5:30 in the evening, Mcx crude was around 955 rupees. But as that was the second last day, the settling price was taken on that day. So when the settling price was taken by the MCX, it was coming around negative of 2,500, 2,800 range. I don't remember the exact price. So why it happened is because MCX crude takes fuel from the NYMEX crude. So the settling price of NYMEX crude will have an influence on the settling price of MCX crude. So that's why it happened. So in that case, the brokers didn't do any mistake, the clients didn't do any mistake. They were not at fault, but still they had lost about 400 crores of capital. See, as I said about cash settled auction of MCX crude, NYMEX crude, on the other hand, is not cash settled. Even if it goes to negative, you can physically go and take delivery and do it. And MCX crude is never delivered, it is always cash settled. So, yeah, that was a small video on why the oil crisis came and what will be the future of the oil crisis. And that's it. Thank you very much for watching.